So we all know that the strategy that we are using, we will not be considering. All right, so let me do this and change this color to red. I like red. All right, so we will not be considering breakup blocks, that is breakup blocks, mitigation blocks. You can see here breakup blocks, mitigation blocks, fair value gaps, liquidity voids, vacuum blocks as reversal zones. We will only be focused with the order flows and the order blocks. This is very important because I know sometimes on your analysis you may see a reaction from a breakup block, or you may see a reaction from a mitigation block or a vacuum block, or like any fair value gap, and you may decide to take that. But just know that once you do that, you're not following true SMC, because in true SMC we don't use those as reversal zones. We only use the order flows or the order blocks. So order blocks and the order flows, those are the POIs that I'll be talking, or I'll be covering into this session. All right, so there are two valid POIs. A POI, when I say a POI, I mean either an order flow or an order block. So an order block or an order flow, those are POIs. Even these ones, the ones that I am not using, or the ones that we will not be using, they are also POIs, because they generally, like POI is a point of interest, and all of these are just point of interest. It's just that now we are only majorly focused with the order flows of the order blocks. So when I mean, or when I say a POI in our session or anywhere else, just know that I'm meaning an order flow or an order block. So a decision POI, which is of course the first choice, and the extreme POI, which is the last line of defense, meaning if it fails, then we are not looking forward to take any trade, or rather price is looking forward to change the structure. So these are the two POIs that we'll be covering. And the decisional POI, by POI I said an order flow or an order block. So when I say decisional POI, I mean decisional order flow or decisional order block. And when I say extreme POI, I mean extreme order flow or extreme order block. So other than those two, there are SMTs. SMTs, they're just weak zones, trap zones. So these are just inducement traps. They're there to lure the early buyers and the early sellers. They are false hope or weak zones. We cannot rely on them to take trades. So they're just weak zones, and even if we see a reaction from there, we will not be taking that trade, because it is there to lure the early sellers, or price will just make a minor reaction and then later invalidate that. All right, so decisional order flow. Order flow, of course, is just it depends. An order flow, it can be a bearish or a bullish depending on the structure. So if it's a bullish order flow, then that will be like a sell before the buy, like the whole swing of selling before the buy. That is a bullish order flow. And then the reverse, or the, I not mean the reverse, but the opposite, it is on a bearish order flow, which it is the buying move or the swing, the bullish swing before the sell. So when I mean a decisional order flow, it can be a bullish decisional order flow or a bearish decisional order flow. It depends with the structure. So this is simply the swing that caused the break of structure. So that's what we call the decisional order flow. By the way, don't if the theory is not making sense, don't worry. We will be covering the practical part, and also I'll be showcasing. There's a diagram above here that I will be using to showcase these words, so don't worry. So the decisional order flow, it is the swing that caused the break of structure. I will showcase exactly what I mean by causing the break of structure. Now the extreme order flow, it is the fastest unmitigated swing. This is very important. Fastest unmitigated swing at the origin of the dealing range. At the origin of the dealing range. Decisional order flow. I mean decisional order block now. This was the order flow, this is the order block. An order block is located inside an order flow. So the decisional order block is the order block that caused the break of structure. Just like the decisional order flow, it is the swing that caused the break of structure. Then the decisional order block is the order block now, which is located inside this swing. They all cause the break of structure. But this order block is very, very important to know, like in this swing, which is the order block that I'm talking about. We will dive deep on that. Extreme order block, of course, it will now be the farthest unmitigated. This is very important, unmitigated order block inside the extreme order flow. Like I said, an order block is, an order block is a refinement of an order flow. That's the reason as to why I'm saying this one. And also the extreme OB, it must be located inside the extreme order flow. Then finally the origin OB. Sometimes price may create an extreme order flow that is not at the origin of that dealing range, and that's when now the origin OB. Let's say now that order flow that was at the origin of the dealing range, it was mitigated, and the order flow that comes after it, it is the one that it was unmitigated, and so that becomes the unmitigated extreme OB, OF, or order flow. And we will now be locating our extreme order block into that order flow, so that now we can get that order block that was on the mitigated order flow that was unmitigated to be now the extreme OB. I will be showcasing an example on this, so don't worry. Right, so once I'm done with this, now I'll be covering this, I'll be showcasing this theory with this diagram here, so that now once we solidify this, then now we'll be now getting into the real thing, that is the real price or the real chart. All right, so exactly right here, I want to believe you all know, taking out the inducement or taking out the recently formed valid pullback low, this becomes a swing point, and if now price reverses and breaks past this swing point, then this makes a valid break of structure. So this is something that I want to believe that you guys are well known of. And yeah, so after identification, after identifying the trading range, or after knowing a break of structure, of course the next step is usually marking the inducement. And I said the inducement can be minor or major. It actually depends if price creates another valid pullback after the break of structure, that is the major, or if it decides to take the one that was created before the break of structure. So this means it will be taking the minor and the external liquidity will be the major. But in this case, we can clearly see that this one here is our our major inducement, because it was created after the break of structure. All right, so now we have identified the inducement. Anything that comes before the inducement, it is a weak POI or an inducement trap, and it should not be used as a valid zone to take a trade from. So this is the reason as to why so when you see this sign, just know that that's a weak POI, an SMT, or a false hope, or an inducement trap. And when you see this one in color green, then you should know that that's a valid POI. All right, so let me get rid of this so that we can have a cleaner chart. And then now here we have taken out the inducement, and now this is the swing. Like I said, the decisional order flow is the swing that caused the break of structure. You can see I have used this whole swing, this one. You can clearly see here there's a pattern here. You can clearly see inducement being taken out. You know that this here becomes a swing point, and if price reverses and breaks past this, this becomes a valid break of structure. Price will not always do this, so it's just that I'm using this example because there is scenarios that price may create this. I'm actually using a complex example so that when it comes to the charts, you get it clearly or with ease, because I've used a complex example, because the chart will not always be simple. So it's good to use a complex example. So exactly right here, you can clearly see a structure that was happening inside our major structure. So in this case, I know most of you guys will pick this one here to be the order flow and say that it was mitigated here, and so you will pick this one here as the decisional order flow. In this case, you will be wrong, because it is not always that case, and you will need to pick like all of these things, starting from this high all the way to this. The reason is why we will be doing that, it is because price has yet made a break of structure. So that's very important. That's the reason as to why we will pick all of these swing move as the order flow. So this swing will be the decision order flow. The reason is why I'm using it as the one that caused the break of structure. You can clearly see it is the one that caused a break of this internal high, and at the same time it caused a break of this external high. So when you see such a swing or such a swing, then just know that that's a decisional order flow, the one that has caused a break of an internal high and at the same time a break of this external high. You can clearly see the first break and then the second break. So you can see this leg that emerged inside this swing or this order flow, it caused that break of structure. And in this case, this is what we'll be calling the decisional order flow. The decisional order block, it is the order block that caused the order flow. I mean, it is that caused the break of structure, sorry. So the decisional order block, it is the one that caused the break of structure. Just like the decisional order flow, it will cause the break of this external high, I mean this internal high, as well as the break of this external high. So you can see first break, then second break. So this is what we'll be calling the decisional order flow. I mean the decisional order block. The reason is why I'm not picking this, even though this is also present inside this decisional order flow, it is because of what I said. I said that the decisional order block, it is the one that caused the break of structure. So this means that this one here, it will just be a weak POI, or I mean a weak, I can use a POI because I said a POI can be an order block. So this will just be a weak POI and price will just react from here and then later fail this. So this here is our first choice, or our first where we'll be looking forward to take the trade from. That is the decisional order block. Alright, so if I am to mark these order flows, you can clearly see, obviously we will be starting from the origin of the dealing range. So you can clearly see that this one here, it was mitigated by this pullback. Alright, I want to believe that you guys are still, when you see something like this in a bearish move, I said that this one here, we will be using this as the bearish valid pullback. And if you see something like this, then we'll be using this as a bullish valid pullback. So just note that this is very important. Alright, so right here, that's the reason as to why I'm using this so that these can present a valid pullback. And by the way, all of this is happening on the same time frame. I mean, like you can see I'm using one color. I think this is gray. So this gray, the gray part, or is it a poly something? Polyline, yeah. This polyline, this is the one that I'm using. And you can clearly see it's with the same color, meaning same time frame. Alright, so you can clearly see right here, price has mitigated that, and once it has mitigated that, so this means that this one here, which was supposed to be our extreme, it will not be our extreme, because we said the extreme order flow, it should be unmitigated. So then we will be shifting to the next one. So you can clearly see this one here is the one that it was mitigated exactly right here. So let me put this line showcasing that it was mitigated. So coming to this next order flow, exactly right here, you can clearly see that this order flow is not mitigated, because you can clearly see where the pullback ended. It didn't dive deeper inside this extreme order flow. We'll be calling that extreme order flow because it is the swing that it is like this, the swing that it is on the origin, like near the origin or at the origin of the dealing range, and it is unmitigated. So it is the farthest unmitigated extreme, like the farthest unmitigated swing at the origin of the dealing range. This one here, it is the farthest unmitigated. This is the farthest mitigated swing because it was mitigated. This here is the farthest unmitigated because it is unmitigated. So this is the reason as to why we'll be using this as the extreme order flow. And of course, the order block that will be on this order flow, I mean at the farthest end of this extreme order flow, is what we'll be calling the extreme order block. And the order block that will be left on this mitigated order flow, of course, maybe it will be left unmitigated, then that will be now our origin order block. So now I can see that now you are getting what I mean by the origin order block. Alright, now getting to this other order flow, you can clearly see that this order flow was mitigated exactly right here. So this here is a mitigated order flow, and it has, of course, an order block, which it is also unmitigated. But in this case, it will be a weak a weak order block. By the way, coming back to our extreme order flow, you can clearly see I used this one here as the weak order block. I mean, I use this as a weak order block. So let's say our extreme order block, our extreme order flow has multiple order blocks. Multiple, I mean something more than one. So you can clearly see there is this, and also there is this one here. So in this case, we have two order blocks in our extreme order flow. So you will now be asking yourself, is this here the extreme or is this the extreme? Remember, the definition of an extreme order block, it is the farthest unmitigated order block inside the extreme order flow. And you can clearly see this here is the farthest one. So this one here will now be the extreme order block. That's the reason as to why I use this one here as a smart money trap or a weak POI, a false hope, an inducement trap. Like, you can use all of those names to represent this one here. Alright, so again here you can clearly see this here is the engineering liquidity right here. You all know that the engineering liquidity should be marked using the order flow. That is, if the order flows are present. If they are not present, we'll be using, of course, the order blocks. So in this case, the order flows are present, and so it is the, you can clearly see right here, like on inducement, that low, the sell side resting on that recently formed valid pullback, that's the inducement. In engineering liquidity, it's actually on that low, the sell side liquidity resting below this low that is near our extreme POI, then that's what we call the engineering liquidity. Right, so getting to this order flow, you can clearly see it is mitigated. And of course, if it's mitigated order flow, then it's invalid. You cannot use that. And of course, this here will be a weak, because I said that apart from the decisional and the extreme, of course, with the origin order block, all the others, they're just weak POIs, and we cannot use them to trade or to take a trade from. So the ones that you can clearly see the ticks where they are. So this tick, we all know that the entry modules, of course, there are 4 entry modules: the inducement sweep, the decisional POI mitigation, the engineering liquidity sweep, and of course, finally, the extreme POI or the origin order block, mitigation. So those are the entry modules. That's the reason is why I placed a tick on this inducement, meaning if we see a sweep there, then that's a valid. If we see a sweep on this decisional POI. Alright, I'm seeing some, I'm hearing some noise on. If your mic is on, kindly. Alright, so exactly right here, after price has taken out the inducement, you can clearly see the decisional and all of that. These are now places where you'll be looking for to take the reversal from. If you see like the entry, if you see a lower time frame confirmation, or if you're using the same time frame, if you see a reversal pattern and all of that. So anything that you'll be using to confirm that reversal, yeah, you will now be, well, like the reversals that you'll be using are these ones. After a sweep of the inducement, a mitigation of the extreme of B, or a mitigation of this one, extreme order flow, that is, a sweep of the engineering liquidity, a mitigation of the extreme order flow or the extreme of B, and then finally the origin order block. Anyway, we will be covering more of these entry modules on tomorrow, that is day 3. Today I was just focusing on these POIs. And so, without further wasting of time, or without using much time, let me get into the real chart so that now we can solidify what I have actually showcased here. Alright, so exactly right here, I'll be using the same chart because we marked the market structure using this. So exactly here, I will, let me do this. Right, so exactly right here. So you all know the market structure we marked yesterday. So today we'll just be marking the POIs. Alright, so exactly right here, you can see that this here is a valid break of structure. The reason is why that's a valid break of structure is because you can clearly see this here. And so, like I said, after identifying the the break of structure, the next step is usually marking the inducement. And in this case, you can clearly see that this here is our dealing range, starting from this low all the way to that high. That's our dealing range. And you can clearly see that in our dealing range, there is no any inducement, not unless the extreme, the external liquidity. So in this case, inside the dealing range, there was no any valid pullback, and so we'll be using the external liquidity as our major inducement. And so let me run price. Oh, by the way, we know that any POI that comes before this extreme, before this before this external, I will not be using external liquidity. Let me just say the major inducement or the inducement is actually a weak POI or a smart money trap. You can clearly see this order block. So this one here is a smart money trap, and I usually use the color purple to represent a smart money trap. That's the reason as to why you can see price reacted and then later failed. This is the reason as to why we don't trade on these weak zones, because they're just there to lure the early buyers. So the buyers who took the setup, who took their buys here, you can clearly see the fate. Alright, so right now you can clearly see our our major inducement is taken out. So probably if I am to trade with the same time frame, I'll be waiting for such a move to happen, and then of course you will be participating. You can clearly see this beautiful morning star, so you can take the entry from there, of course, and be targeting this external liquidity right there. Of course, it depends with your agreed risk to reward. So if a 1:something something is good for this one, that's the reason is why, of course, there is top-down analysis. It's just that I don't want to spend much time diving into the top-down. So you can clearly see this, right, something like this also happens where price can go all the way towards, nearing your take profit and then reverse back towards your entry, and all of that also happens. Alright, so in this case now, you can clearly see that this one here is our break of structure, and I'll be using this one here to represent the break of structure. And yeah, this one here is our low. So this means that we are in a new trading range. So where is our inducement? Of course, you can clearly see right now, this here is our inducement. And yeah, first, I will not mark the POIs until I make sure that the inducement is taken out. So first, alright, you can clearly see that price has created another valid pullback, so we'll be shifting to that. And if price takes this, then this means that it's now time to mark the POIs. And exactly right there, I can clearly see price has taken out that, and right now it's the time now I'll be marking the POIs. So we all know that we'll be starting with the order flows, and I can clearly see this. And exactly right here, you can clearly see that this order flow is mitigated. I will use this color to represent an invalid one. And like I said, when you see such a pattern that was created inside here, you can clearly see that price has taken out this and then made a break of structure. You can clearly see this is the pattern. So I know someone here will be using this one here as the extreme order flow, but they will be wrong. That's not the the extreme order flow actually. That's not the extreme, or that's not a valid order flow. The reason is why I will not be using this as the valid order flow is because you can clearly see price has yet made a break of structure. So I'll be using all of these swing. So you can clearly see that, and this swing was mitigated exactly right there. So this means now in this case I have no any valid order flows, and so I'll be now focused with the order blocks. So in that case, I'll delete all our order flows, and for the order blocks, I will need the order block that caused the break of structure, the extreme order block, or the origin order block. In this case, since we don't have the order flows, then I will only be considering the decisional order block and the extreme order block, two valid POIs. And right here, you can clearly see the one that caused the break of structure is actually this one here. You can clearly see that's the order block that caused the break of structure. Alright, you can see that this one here, we all know the criteria of identifying a valid order block. You can clearly see it should be having a valid fair value gap, and yeah, you can clearly see that this here is the one that is having a valid fair value gap, and it is the one that is located in this swing that caused this break of structure. So you can clearly see that will be the decisional, and of course the extreme, it will be easier to identify. So this one here will be the extreme, And where will be the engineering liquidity? The engineering liquidity, it is actually this sell side liquidity that is near the the extreme order block. So I'll be using that one, right? And we have here our, exactly right there, we have our inducement. So, right, so we have marked everything. Now let's see where price will be reversing from. Will price reverse after the mitigation of this this decisional, after the sweep of the engineering liquidity, or after the mitigation of this extreme order block? So I'll be using these colors to represent valid bull or bees. And yeah, so let me run price. And exactly right here, you can clearly see after price has mitigated that decisional, you can clearly see it spiked up. And probably I'm looking forward for a break of structure right now. So in this case now, after seeing this kind of spike, probably you may go onto the lower time frame for the entry and all of that. Probably you'll get your entry somewhere here, so that now you can participate this buy if you dive into the lower time frame. So if you're using the same time frame, this is the cases where now price may, because in such kind of price actions, it is very hard for you to capture a setup using the reversal patterns. Yeah, and if you do, then you'll get smaller smaller risk to rewards. And yeah, they're not like, right. So exactly right there, we're in a new trading range. And where is the inducement right now? You can clearly see that this is the inducement, but that doesn't mean that price cannot create another one. Right, so let's see. All right, you can see that price is heading up, and we know that this one here is now there. You can clearly see here price took this. So this means that we are in a new, exactly right there. And you can see price has taken out the inducement. So let's start marking our POIs. This one here is the extreme order flow. It's mitigated, so it is a mitigated order flow. Then coming to our next order flow, which is this one here, you can clearly see it's also no, it's not mitigated. So this here will be our extreme order flow, and at the same time our decisional order flow. For the order block, you can clearly see this one here. So that's exactly right there. You can clearly see this one here. This here is something that I'm interested in seeing, but I will not be considering that. So anyway, you can clearly see we have either the extreme order flow or the extreme order block. So let's see. Exactly right there, after price has mitigated the extreme order block, you can clearly see it's showcasing this reversal. And if it makes out to breaking the structure, of course, yeah, in this case, you can see the pattern was nice. So in this case, will just be after that reversal pattern. Of course, stop loss, you can place it right there and target there. The safest stop loss is below here, but this will make your risk to reward less. So meaning placing it here, it's worth it even for the risk to reward. So you can clearly see there we have the three, but all right, let's see. Exactly, you can see, yeah, that wasn't a good idea after price made it out all the way here. So in this case, price did this, and this is good. You can clearly see right here that we are now changing the structure to bearish, exactly right there. And yeah, after the break of structure, where is the inducement? Of course, I can clearly see that this one here is our inducement. We have done this yesterday. That's the reason as to why I'm not that much explaining why that's there whatsoever and whatsoever. So this is the minor inducement. This one here will be the major inducement. But anyway, I will not mark the POIs until price. But anyway, we know that price didn't even took this. So let me just mark just in case. So this one here is the swing that caused the break of structure, but in this case now this swing is happening before the inducement, so this means it will be invalid, as well as the order block that caused it. The order block that caused the break of structure, also I'll be using it as an invalid one. yeah, I'll be using it as an invalid or ask is it valid, all of that. But anyway, I'm not expecting for a sell here because you can clearly see this is the inducement and we need first price to check the inducement before we can participate for the sell. Anyway, after that there is no anything else apart from this rejection block. So let's see what price will eventually do. So exactly right there we can clearly see after price has mitigated the decision order flow, of which is not something that we should consider taking a trade from because it was before the inducement. So in this case there was no any setup, and yeah, we know that even if price has not taken out the inducement, yesterday we saw this to be a valid break of structure because it was a valid pullback on the 1 hour, and we all know that if that's the case, then we can validate that this is the high of the trading range and we are in a new trading range. Price has taken out, all right, price has yet, so that's the, can clearly see that's the inducement. So let's see. All right, price has taken out the inducement. In this case it was a sweep, then price made a break of structure again. Yesterday we saw this not to be a valid break of structure because this one here was not a valid pullback on the 1 hour. So in this case this one here becomes our inducement. Right, so having our inducement exactly right there, I need for price to come and take it out before I can now mark my POIs. Exactly right there, I can clearly see that price has taken out this inducement. That is our major inducement, and now I'll be looking forward to mark the POIs. Alright, so exactly right here, starting from the top, marking the order flow, I can clearly see this order flow is mitigated. I'll be using the color invalid, that is that color, whatever the color is. I can clearly see this is the next one, exactly right here, and in this case this order flow is not mitigated. Why is it not mitigated? It is because you can clearly see that this here is not a valid pullback as well as this. So this means that this one here is our valid order flow, and in this case exactly right here I'll be using this valid OF. So exactly right there, and for the extreme order block, of course it will be somewhere here. So it will be some, because we can't see it in this time frame, then we'll need to shift to the lower time frame, of course, so that you can see the hidden one. So probably it will be somewhere there. That will be the hidden POI or the hidden BOB. So anyway, let's see where price reverses from. So exactly right there, you can clearly see price reversed inside the extreme order flow, and that is when I'm anticipating for a break of structure. But unless price wants to, alright, so exactly right there, I can clearly see that price made it out to the external liquidity. So exactly right here, this is a bearish order flow. So in this case, if you were to take the entry, of course you can see this is based off an order flow, and the order flow is a huge zone. So for me, I will do it for a second leg, or maybe do something like this. After that reversal pattern, I will place my stop loss above the extreme order block, and of course I'll be targeting somewhere here. This is based off the same time frame, that is, and you can clearly see, of course, if you're using the same time frame, don't expect to have like insane risk to rewards like the 1:4, 1:3, 1:2 whatsoever. It's very rare for you to get such kind of risk to rewards if you're using the same time frame and using reversal patterns. Right, so now in this one we can clearly see that this one here is the inducement. Exactly right here, this is the inducement. So that's the inducement, and yeah, let me continue running price and see if price does take this inducement or if it creates another one. Exactly right here, you can clearly see price created another one and another one. So we have that one as the recent one. So let's see. Again, price created another one here. So we shifted there, and since price has already taken that, now this is the moment where we mark the POIs. So I'll be using, all right. So starting with the extreme one, I can clearly see this here is the buying move before the sell. So this here is our extreme order flow, but it is mitigated, so it will be a mitigated order flow, and I'll be using this color to represent a mitigated one. And in this case, you can clearly see that price has taken out some buy side liquidity, with the recent one being this one here, I mean this down here. So this means that we have a structure that I talked about here, and I know most of you guys probably after seeing this maybe they will use, alright, so let me get rid of these. So probably they will be using this one here, which was this move, as now the extreme. Of course, since it's mitigated, so they'll shift to this one, and yeah, so exactly right there, they'll be shifting to that as the extreme one. And in this case, you'll be wrong, because this one is not the extreme order flow, but rather all of this buying move. So that will now be the extreme order flow. Of this case, it will also be the decisional, because it is the one that actually caused the break of structure. But since you can clearly see it is the farthest and mitigated, then we will need to use the word extreme order flow. And so since it is a valid zone, then I will change the color to this one. And then after that, I don't have any other POI to mark, not unless I mark the origin order block. Of course, this one here. This one is the origin order block. I said if price, now when do we use now this origin order block? The moment we only use this origin order block after the extreme POI has failed. So after the extreme POI has failed, we will be looking forward for this origin order block, of which it was the order block that was present inside this mitigated extreme order flow. But now since it's mitigated, it's no longer valid, this order flow. The valid order flow, or the farthest unmitigated order flow at the origin of the dealing range, is this one, and this one here is what we call the extreme order flow. If this extreme order flow fails, we'll be looking forward to this. Anyways, since this is also the decisional, I'll be expecting to see POIs inside here. So in this case, you can clearly see you cannot get any POIs here, so I'll need to find the hidden ones. Of course, I will need to shift to the lower time frame, and that's when now you get to shift to the time frames. And yeah, so you can use any, you can use the 15, you can use the M, but I usually like the lower one, I mean the internal structure. If you're using the H4, of course I'm expecting you use the M15, because it is the one that is showcasing the internal structure. And you can clearly see right here that we inside this order flow, we have this one here as the extreme, so that there is the extreme. And of course, this one here is the decisional. Where is the decisional? The one that caused the break of structure, that one. So that's the one that caused the break of structure. You can clearly see this one is the one that caused the break of structure, and this one here is the one that is on the extreme. That is the 15, of course. If you want a larger zone, you can get into the 1 hour or the M30, but refining to the smallest one is actually good also. So exactly right there, now I'll be shifting back to the H4, and you can clearly see right here the zones that I have marked. It's actually this one. So they're very tiny ones, but anyways, so you can see this here is the decisional, because this is the one that is present inside this. Remember, this is the extreme order flow, but it is also the swing that caused the break of structure. So this means the decisional also, it will be inside here. So anyways, price can mitigate the decisional, it can fail it. It can mitigate the extreme order, the decisional order block, it can fail it. It can mitigate the extreme order block, it can fail it. And it can mitigate the origin, and maybe now it can, yeah. So it can also mitigate the decisional. Like you never know where price will mitigate and give the reaction. So whatever, like that's the reason as to why we use the lower time frame confirmations, because they will give you a broader picture of where price. You can clearly see after this, probably someone choosing to enter based off this extreme order flow. After seeing this reaction, probably they will enter. But for me, if I am to take a reaction from an order flow, I will need to see a second leg. So let's say in this case, after seeing, so in this case, this one was not a break, but let's say price broke past this one here. In this, now I will be well convinced that this is the second leg, and I can now take that trade. But in this case, as you can see, price failed price failed the decisional order flow. You can clearly see the decisional order flow mitigation exactly right here. Price failed it, and now price has mitigated the decisional. This here is another whatever. So you can clearly see price is giving that, and probably for those who are using the lower time frame, I mean, or the ones using those kind of reversal patterns, probably they'll be using that, stop loss above that, and of course targeting here. This is a less probability zone. Not that they are not a lesser probability zone, but I will not recommend such kind of not unless you see a second leg. Like first, see, the second leg gives an extra confirmation that now there's a possibility that price will not be going forward for this. But without the second leg, and you can clearly see that there is this kind of whatsoever they up, then in that case, I'm not like convinced. All right, so exactly right here, you can clearly see that price has made it out to the extreme, exactly right there. After the mitigation, you can clearly see, I can even see a second leg here. What I'm saying about a second leg is this one. You can clearly see that one, and then price created a valid pullback exactly right there. So right now, if price reverses back to this leg, then I'll now be taking the entry. So this means that my entry will be somewhere here. You can see there after price has reversed into that leg. That's where now my entry will be. And of course, I'll be placing my stop loss above so exactly right here, this is my entry. Stop loss, it will be above this leg or above the first leg, and of course, we'll be targeting based off if you're using a fixed risk reward, well and good. If you're using the external liquidity, well and good, and all of that. So in this second leg, you can clearly see exactly right there, price did that. So right here, this here was the entry, but if you want, you can wait. And upon that, you can clearly see here, you can take that, and stop loss, you can place it above this first leg. And of course, you can be targeting now this extreme, that is this extreme here. So in this case now, you can see that you have mitigated, like you have your entry on the extreme order block, of which we know that this is the highest probability zone. Not unless now price fails this, then this one here becomes the highest probability zone to take the reversal from. But at the moment, this one here is the most extreme, like, and it is the one that is the highest probability, because you can clearly see that its order flow, it was not mitigated. So in this case now, this will be a good entry. And yeah, of course, that doesn't mean that price will not fail this. Sometimes price may fail this. Price can go all the way somewhere here and then reverse back all the way to this origin, and then now later do the, yeah. So it does happen. Like, the market is just an uncertain environment, and fortunately or unfortunately, we need to abide by it, and it is always right, as you can clearly see right here. So you can see that price did all of that, but then later we will see that price is heading up, and in that case, then that's the reason as to why now you will need to know about these lower time frame whatsoever, because now if you see something like a break past that, or what I actually recommend is that this stop loss, you actually move it based on the structure. You can clearly see this this valid pullback, can see another valid pullback, can clearly see another valid pullback. So probably you will now be moving your stop loss at the highs of this valid pullback. After price has created a valid pullback, you move a stop loss at the high of that, another stop loss at the high of that, and the high of that, until price takes out that stop loss. Then in that case now, you know that that there is a possibility that price may. Alright, so let me get rid of this. There's a possibility that price may fail that zone, and of course extend towards this. That is if you are not using the extreme, or if you are using like let's say like the decisional, or if you are using the decisional order flow, the decisional order block, or the sweep of the engineering liquidity, knowing that that's not the most extreme zone, meaning price can fail that and go towards the extreme zone. So such a things happen, and you can clearly see it's very, very mentally disturbing, knowing that price has extended all the way nearing your TP and then reversing back towards taking you out. So in that case, that's where now people actually recommend the taking of, I mean, that's the reason as why people recommend the taking of partials, and also the taking of and also the trailing of the stop losses, of which sometimes it can help you, sometimes it's not recommended. But you can clearly see in this kind of cases, it will be very hurting knowing that price has done such a move and then coming to take you out. So probably right now we'll be looking forward, price will be looking forward to reverse probably, or the zone that I'll be looking forward for is this one here. And then yeah, so if price now mitigates this, gives a reaction, of course this here is now the probability zone. So price can extend all the way there, or it can fail that and give the reaction and just make a break of structure. So those are the moves that you cannot like predict that price like 100% know that price will mitigate this and reverse back. Price can mitigate this, give a reaction and do that. We all know that our job as traders is not to predict but to ride the right. You can clearly see right here, if price comes here, mitigates this and gives a reversal confirmation, then that's when now we participate, because we can clearly see that the market, it has showcased the way, and in that case now we'll be now riding by it. So that's what we'll be doing. So but at least we know that price can mitigate this, give a bearish reaction, or price can actually strike through all the way, breaking the structure. So guys, I'll be stopping it here for the identification of the order blocks and the POIs and all of that. And yeah, right now I'll be ready for the questions.